Hello, this is the TradeSight U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, the 11th of November, Veterans Day, going into Friday, the 15th. As usual, Veterans Day is a bank holiday here in the U.S., which means that the U.S. banks and bond markets will be closed. Stocks will be open, usually a horribly weak session for stocks. Not really sure why they don't just close it all when they're in that situation. But at any rate, stocks will be open, but probably not very tradable, certainly not after the first hour of trade. It's a good day to take a break or study up on some of your charting that you've been meaning to for a while. Here's the S&P daily chart on the screen here, and you can see we did have a big dip on Thursday and a rebound on Friday back near highs. The dip corresponded with the day that Twitter came public, and we'll take a look at that briefly in a moment. There's another video going up that's all about the Twitter action. So we don't really have much for a signal here on the S&P right now. Here's the NDX, which does have a 13 seeker sell signal in place, and we're still contained by the risk line of that under either way that you calculate the risk line. So that would tell us that's a little more negative for the market than positive, but certainly Friday reversed the loss from Thursday. Here's the semiconductor index, the SOX, also operating under that 13 sell signal. Here's the biotech index. Bounced, as we said, we were aiming for that red static trend line, hit it on Thursday exactly, and bounced right off of it. Here's a look at crude oil, which has now dipped well under 100 back to, again, we were focused on this back after the run up, and we were looking for summer to end and the prices to break back under 100, and we said we were going to focus on that red static trend line, the last move up, and look what we're finding as support now, right around 94, is that static trend line. So that's no surprise, and that was our target from a couple months ago. Here's a look at the gold index, also finally approaching the static trend line of this last 9-bar move up, although I would say if you look at gold over the last several months, it's extremely contained. Here's a look at some of our key stocks that we like to follow. Amazon rolling over pretty sharply from the gapped highs on Thursday with the Twitter announcement. Here's a look at Google, which is slipped back a little bit. You can see a very clear downturn in place on Google that we'll be looking to play when the break of that when it occurs. Google should have a big announcement coming up here in the next week or two ahead of Black Friday. Here's a look at Apple, kind of the same pattern. These two stocks were not very exciting this week. Tesla fell apart after some earnings talk, and here's Netflix, which has been kind of boring and untradeable for a while. Let's go ahead and switch now. Before I go pull up some of these other stocks, here's a look at the 5-minute chart of Twitter. Now, this came public. It was priced at $26, opened at $45, so they did a better job with this than they did with Facebook over a year ago. Hopefully won't trap a bunch of money in the market. But still, a bunch of people feeling like they missed the boat decided to go ahead and buy anyways, up at 45 bucks. And, of course, the stock's slipping back down. As always happens when you take these stocks public, it's going to decline for a couple days after this. They need to get out of the excess shares, and they're finding plenty of people who are crazy enough to buy on the opening day. Well, the big key for this stock will be if it ever breaks under 26 for more than a couple of minutes. We'll see if we get back near there in the next month or so. And then remember the 3-month mark. But overall, they did a good job on the first day. It opened and ran up, even broke 50 for a moment, came back down, started to break the 45 opening level, and that became support. So right where they opened it, they really didn't let anybody get underwater. This little move you see where it did slip under 45 briefly to shake out the weak hands, this is the type of move, if we get back near 26, which is the IPO price, that we're going to be interested in watching for, but that'll be in the other YouTube video that's going to be about Twitter here shortly. So in general, then on Friday, we did slip back. Now, let's take a look at the futures. This is the NASDAQ futures for the week, starting, this is Friday, Thursday, Wednesday, Tuesday, Monday. So last Friday, we closed at 33.70. Here we go this week. We closed just under 33.70 this week, closing just above 33.61, a loss of about 8 points for the week. Still about 80 points of range, but almost all of it on Thursday on that decline, and then the move back up. Here's the S&P, the E-mini futures. Again, we closed these. This is actually up for the week, which is pretty remarkable. Closing last week just above 1754. We did dip down. We finally got that big day on Thursday. It was real nice to us. Made some good money on that session, and then some minor stuff Friday morning and a rally on lighter volume comparatively. Closing at 1766, so up 12 points for the week on the ES. But you can see that Monday and Tuesday and Wednesday were not overly interesting action-wise. Let's go ahead and look at the economic data. Now, again, this next week is interesting. You've got Veterans Day on Monday, so the stock market's open, but nothing else is. Should be dead. There's no economic data coming out. There's no economic data due on Tuesday the 12th either. We hit Wednesday. Now, this is options expiration week. So Wednesday of options expiration week, and if not Wednesday, then almost for sure Thursday should see the options unraveling move. So we'll be looking for that Wednesday and Thursday, looking for doing very little on Monday. And then on Wednesday, we've got MBA mortgage index at 7 a.m. Eastern time. It's 2.5 hours before the stock market opens. Import-export prices an hour before. Treasury budget to 2 p.m. Eastern time. Thursday, the usual continuing and initial jobless claims. We've got trade balance, big number there, an hour before the bell, and productivity, unit labor costs. That's all Thursday. And so they'll smack crude oil inventories and the natty gas numbers later on in the session Thursday morning. Again, trade balance is a big one. And then on Friday, we've got Empire Manufacturing, Industrial Production, Capacity Utilization, Wholesale Inventories, and again, options expiration, which means that Friday is going to be dull. So Monday will be virtually dead because of lacking volume, lacking the type of environment that professional traders should be trying too hard in. Not that some people won't do it anyways. So Mondays should be virtually untradeable, and Friday with options expiration probably about the same. So we're really banking on the middle of the week. I would say with no data Tuesday and coming back from the bank holiday, Wednesday and Thursday will be your big ones. So we'll be looking at that and trading it as usual from the TradeSight Trading Lab. Hope to see you there. Charts as usual brought to you by eSignal 11. Have a great weekend and trading week.